Hi, this is Zak Mir with the Bulletin Board Heroes here at Vox Markets on Monday, the 5th of July. Starting on with Rockfire Resources, where there were certain rumblings last week. We had a break of that resistance line there around, what was that, 0.9 pence break of the 50-day line as well. Rather the 200-day moving average as well, which is a big positive. And while we're above that, looking for a retest of basically that late January peak towards 1.7 pence. That's also the top of that channel that I've drawn there from back in October, and obviously the top of the range. In terms of just any further trigger to make us feel confident, end of day close above that May peak, intraday peak at 1.1 pence would help boost confidence, and we're really looking bullish while we're above that 200-day line at 0.9 pence as a stop loss. Always nice to see shares which hit a resistance line. People sort of do question where I get my resistance lines from, or resistance line targets from. That one was rather obscure, that February line there, and it was pointing towards 4.4. We just hit that on the nose today. I think the high today, 4.35, so that's quite reassuring. Now we've got also the aftermath of a gap to the upside today through resistance, which normally is a continuation signal and offers us the prospect or the possibility of a retest of November resistance towards 5.5 pence. Quite a staggering rebound for the shares, which seemed to be down and out just a few weeks ago. So pretty impressive. In terms of where any danger warning would come in, back around, I suppose, back below Fridays and Thursdays support around the 3.1 pence, 3.2 pence, really delaying the upside scenario. Ideally, there's no end of day close back below the floor of the gap at 3.6 pence. Moving along to a stock which I know has its followers, and they've been waiting quite a while for salvation in terms of the pullback that we've seen from December. We're in a falling wedge pattern here, so we really need to break 0.4 pence, or 4.2 pence rather, on 0.42 pence rather, on that resistance line there from December. If we can do that, then we've got the prospect of a retest of the December peak above 0.6 pence, hopefully by the end of next month. Everything here really contingent on the shares remaining above the 50-day line at 0.36, which hopefully they'll do over the near term. But if you're cautious, just wait for 0.42 to break instead. Moving along to Advanced Energy, which has also broken a near-term resistance line. That's one there from April at 2.4 pence. Just juggling with the 200-day line now at 2.5 pence. An end-of-day close or a weekly close above that should deliver some follow-on move to the upside. At the moment, we're looking to 3.4 pence, which is the top of the rising trend channel from back in November last year. Stop loss back below 2.2, which is the floor of the channel. Time frame on 3.4, hopefully by the end of next month. Stock which has rehabilitated itself in the recent past is Tekcapital. We had a gap close buy signal, which was that we had a gap down there in March and closed above that at 15 pence at the beginning of May. Reasonable progress since then, and nice to see another gap to the upside, which suggests the bears have been caught out and there's a bit of momentum behind the move. That should ensure that we hit 25 pence as soon as the end of next month, and that upside valid while we hold above the 50-day moving average at 15. So above 15, looking for 25, which is a classic setup. Interesting that Revolution Bars hasn't really come off too far off the lows that we've had since December. Freedom Day on July the 19th, so at that stage we'll be able to wander around the pubs and clubs giving each other COVID at will, and obviously drinking while we're doing that. What we'd like to see now is an end of day close above the bottom of the gap there from May. That was around 24.5 pence. So end of day close above that, which we should get today, should allow the shares to then head towards the top of the gap around 33 pence. And that would be a target for the end of next month. Best case scenario target here up to 42 pence over the next 2 to 3 months, which is that December resistance line projection. This stage only well below 20p, really delaying or questioning the upside or the recovery argument, especially after that unfilled gap to the upside that we had to start July. Very impressive indeed. Stock which I just nearly missed out here, but we'll go back to that. N4 Pharma bouncing off the floor of the rising trend channel that we've had in place since the autumn. that level around the 8 pence level, 8 pence there, and also where the 50-day moving average and 200-day moving averages currently lie. So above 8 pence, looking for at least 10 to 11, which has been post-March resistance. Big figure target here up to 16 pence by the end of next month, if this is finally the trigger point for a move to the upside, which it looks as though, currently looks as though it will be. Moving along to a stock which has been one of the best risers of the recent past, just coming up with obviously the oil stocks in general have been doing rather well, but i3 Energy just missing the second target that we had there towards 17 pence, but the reason for inclusion today is that it looks like we can upgrade the upside here, looking for 22 pence by the end of next month, while we hold above 14 to 15, which was the resistance over the last couple of sessions of June. The real reason for the optimism here, though, is that we had a gap to the upside at the end of last month that remains unfilled. Never looked like it was going to be filled, and unfilled gaps through resistance tend to be very strong signals indeed. So 22 pence by the end of next month for i3 Energy as a best case scenario. Stock which one feels rather sad about in terms of the horrible pullback that we've had from 9 pence down to 2 pence of late. Looks as though there's some signs of the shares emerging from that falling wedge or that falling triangle that we've had over the last 4 months or so. If you are cautious on the stock, probably wait for an end-of-day close or a clearance of the 2.85 area, which is where the 50 and 200-day moving averages currently lie. But with that 200-day line rising, that could provide positive momentum to the shares and give us a potential sort of recovery play for MGC Pharmaceuticals. So let's see how that goes. Although, of course, wouldn't really want to see the shares remain below 2 pence for any extended period of time. Stock making its debut here on the bulletin board heroes is Taylor Maritime. The reason for inclusion today is that very strong, well, series of very strong candles that we've had almost since the end of May. So either sort of flat or bullish candles today. Very, very strong one, i.e. opening at the low and currently the high of the day. If you are a follower of the stock and actually know more about it than I do, you'd be looking for a target here towards 95 or 96 pence over the next couple of weeks within that rising trend channel from the end of May. Just a couple of stocks now to look at on the Aquis market. Always feel that market gets a bit left out on the charting front, and if I can get the market to come through now, we'll hopefully see a couple of the stocks which are in vogue at the moment. We'll start off with KR1, which reported bumper sort of results last week, breaking that real line of resistance from back in February at £1.37. And the longer we remain above that, the greater the chance of a move up to the last resistance on the way down at £2 plus. And that could be seen by the end of next month. The positive here is that we're back above the 50-day moving average, and the longer we stay above that, the greater the chance of a decent move to the upside. I suppose another plus is the way that even though the shares pulled back from £2.50, they never actually tested the 200-day line. So that does suggest this is still a very strong technical situation. Finishing off with one of the best performers of the year to date, Valyrian Blockchain. Here, just following up on the previous look at the stock, we're in a rising trend channel from the 50-day moving average around 40 pence up to that line of resistance from February. That's running currently towards 95 pence as a target for the end of next month. And at the moment, any dips towards the 40 to 50 area regarded as a long opportunity. If you're looking for the bigger picture, maybe by later in the year, maybe the autumn, something like that, then there is a line of resistance from the early part of February heading towards £1.20. So the levels there, 40, basically 95, and then up to £1.20. And the hope is that there will be no weakness now back below 40 pence, which was resistance on the way up. That's it from me today. More updates tomorrow.